Interest rates are hitting a 15-year high. Mortgage rates for the 30-year at over 7.5%. Guys, there's $5 trillion on the sideline ready to invest at any point. Where are we headed? And what the heck is going on in the markets right now? Guys, I want to give you 5 reasons that multifamily will probably not get shaken up in these markets in the long run. The number one reason, guys, loan to value ratios. Right now, most housing bears, the guys against it, are saying that everyone is over leveraged, everyone is taking on too much debt, when in reality, the loan to values rate basically prior to COVID are around 65%, and now are even headed as low as 55%. Less people are going to take on debt as debt goes higher, right? So that means that more people are closer to paying off their homes and paying off real estate than the previous decade before. The number 2 thing, guys, debt service coverage ratios have been healthier on average. They are 1.5 to 1.8 versus 1.3 to 1.5 in the previous decade before the housing crash. So basically this means that properties are producing more cash flow than their debt payment, and it's showing that they have healthier cash flow than they have the previous decade. So more people are in a cash position, a better cash position than they were before. All right, the third thing, guys, what happens when properties are, they're soon to refinance, right? And we're going up into a high interest rate area. Guys, there's probably going to end up being more sales, as when you refinance a property, your cash flow is probably going to drop a little because the interest rate is now doubled from 3.5 to almost 7.5%. So your cash flow is going to be diminished, which is going to cause more people just to say sell, and they want their cash out and cash back. However, guys, with so much cash on the sidelines ready to deploy at any time, people are ready to purchase real estate. And I bet you that we will go throughout this thing without a blip. Cap rates will rise, things will get cheaper, but this is just a bumpy road, and there's so much cash that people want to buy real estate right now. This is just a blip. The fourth thing, guys, people still love multifamily and single family rentals for investment purposes. Guys, it gives you the best appreciation, cash flow, leverage, tax advantages that you just can't get anywhere else. People love this, and they are not highly dependent on people. People are hard to find right now. This has been a safe investment choice for investors and still one of the best options. The fifth reason, guys, last but not least, in the financial crisis of 2008, demand plunged. Guys, supply skyrocketed. And what was the result? It only caused multifamily to bottom out at 92% occupancy. And in 2010, it shot right back up above 95. All right, guys, so what does all this mean? Guys, people can shop from anywhere. They can order food from anywhere. They can work from anywhere. And one thing always remains true, though. They always need to live somewhere. The road can be sometimes a little bumpy and cyclical. However, the rental housing and multifamily markets all have benefits and win out in the long run. Guys, so what's happening in the markets right now? The stock market's starting to just tank. The ratios of earnings recession is here, right? The recession is real. The interest rates are jumping, trying to get inflation in check. The housing markets, they're going through a correction that, I should say, multifamily and housing markets are going to be going through a correction, right? You already see home prices dropping. You see cap rates coming up for multifamily. And this is just caused by interest rates. It's gonna lessen the demand. People can now afford way less than they could afford when interest rates were 3.5%. So people have to scale back. What is happening? What does all this mean? That means it's creating a huge opportunity pushing over this winter. We think early 2023, there's going to be some huge opportunities to buy some real estate. We want you to take advantage of this right beside us. We're going to take advantage of this real estate market and the bump in the road, as we would say in the cyclical real estate world. Guys, this is one of the reasons that I created Mac Capital. It's so accredited investors could invest beside us on these opportunistic real estate deals. We feel that, well, the 401k is now the 201k, and a 401k was never really meant to be your form of retirement. It was just another investment strategy. And we believe to diversify into real estate will be one of the best things you do, and the opportunity is coming now. We believe in early 2023, mid 2023, there's going to be a lot of opportunities in real estate that you can take advantage of with us, beside us, and you don't need to own the whole deal. We all invest into a portion of the deal and own it together and reap the rewards of real estate. Guys, get signed up on the link below. Register with us. We'll get in contact with you, and we hope to hear from you soon. I'll see you guys in the next one.